Daddy born poor, Mama was too. Walking through the snow, plastic bags on their shoes. Papa selling houses, sleeping in a car. 4 babies in the backseat, underneath the stars. Well, hey, hey, just work a little harder. Hey, hey, punching that clock with work and prayer and a little bit of luck. Make so much money, need a 10-ton truck. Ha, 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 ha.
Hey, good morning, everyone. Paul McMann here with Forex Smart Trade. So glad you could join me this Thursday morning, August 10th, 2023, here at Forex Smart Trade. Our mission is to help make you a successful currency trader by teaching you how to trade with our highly accurate proprietary trading indicators that have been around a quarter of a century now and continue to perform, are simple, but continue to perform at a very high rate. So with that, this morning I'm going to show you one of the trade strategies I use. There's probably about a dozen, and when we train you, we will customize a trade plan based around your availability to trade and your risk preferences. So with that, let's jump right in, and we first need to listen to this guy.
Due to federal and state regulations, we are providing the following disclosure. Please stay tuned, as this will take less than a minute. Foreign exchange, futures, and cryptocurrency trading are highly risky, and you can lose all the money you invest should you decide to engage in live trading. We are not responsible for your investment, trading, or tax decisions. We are not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We are not licensed commodities brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker, and we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend you seek advice from licensed professionals. Any trade results that we show should not be considered typical of our students. We do not and cannot track the results or performance of our students' private trading accounts. We do not know what a typical or average student earns or loses trading. This is not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises our training or tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advance written permission.
One of the great things about the program is that we do these live trades. They've got multi-purpose, one of which is it's a teaching moment to see someone who is a good trader walk through their analysis. It's a teaching moment. And then two, to give you some evidence that the tools work. If they work for me, they'll work for you. In addition to kind of the live trades I do, once you become a member, we've got a live trade every morning at 10 a.m. That tends to be a little scalp trade. We also have a live trade every evening at 10 p.m. where they're trading the Asian and Australian markets. And one of the things that differentiates us from other people is that because we let you, once we've trained you, we're so confident in how well it works, we let you trade with company funds. One of the ways we make that work is that there is continuous training. So every Wednesday evening, we are providing trading. Every Saturday morning, we're providing training on that Saturday morning session. In addition to reviewing a trade strategy, you're allowed to ask questions, and there's time for you to ask questions. So you're getting the feedback that you need to improve the trading. I like to work off of a little checklist to make sure make sure I don't forget anything. Good habit is every day to restart Green Chart. It clears out the memory, and it also picks up any updates. At the end of every day, also good habit to just review the day's trades, specifically the trades that didn't go our way, and figure out what might have been done better. And with our simulator, you can go back to a specific time and take a look at exactly what you were looking at and see what it was that you might have missed, or there was some nuance there that you didn't see. Again, because of the coaching help we provide, if you can't figure it out, you can ask one of us to help you take a look at it. Many times I've reviewed things with people and they were just executing the trade wrong. They didn't quite understand it, and that will make it so that it doesn't work sometime. We are technical traders. Last night we didn't take an overnight trade. I didn't see a good signal. I guess the one benefit though was the trade from Monday night finally closed. So that was a case where the trade was open for a couple of days before it closed. When I have that, there hadn't been much movement in the last couple of days in the euro dollar. So as you saw yesterday, I didn't take many trades because I just didn't see the good signal. If the signal's not there, we don't force it. We wait. Again, I didn't lose money yesterday. I made $400. So it's waiting till you see those opportunities to get in, take a trade. I only need 2 or 3 good trades a day. And on average, I get that. Yesterday, I only took 1 trade. We are technical traders. We are not trading on the news. Fundamental traders trade on the news. It is too hard to predict. Our indicators are very, very good at being able to help us sort out the direction based on the price action movement of the currency pair. But we do want to know what news there is so that we can trade around it. And we take a look at that at forexfactory.com. Forexfactory.com breaks news down into 3 categories. Yellow, which is low impact, which we don't worry about. Orange, which is medium impact. I generally don't worry about it. And red, which is high impact. High impact are items that I want to worry about and I want to trade around. And based on my experience, when you have a red item, these like CPI, unemployment claims, these numbers are already figured out. They even though they're announcing them at 8:30, they had them figured out yesterday. And what happens is the information starts to leak and people trade on it. And because of that, by the time the indicator picks it up, a move could have happened and we lose money. So as a rule of thumb, I try to stay out of it 2 hours beforehand. So we are within that 2-hour window. Back in the day, I used to, when I first got out of college, I sold a equity research service to money managers and hedge funds. And I had been in many an office when a trader would get a call saying, hey, this is happening. And, they would trade on it before it was publicly announced. So, it does happen. It's not supposed to happen, but people are people and it does happen. So we've got, we're not going to trade the dollar this morning. Also, it is a bank holiday in Japan. So we're not going to trade anything with the yen. So that's going to kind of limit us in terms of what's available. We don't want to trade the yen because when there's a bank holiday, the volume's lower. And when the volume's lower, the indicators don't perform as accurately. We want to trade, ideally, since we're going to be trading off of a 1-hour chart, we want to trade when there's active trading going on. So with that, let's kind of jump in and see what we have. One last thing is the trade I am doing is something called the 10-point trade. I like to do it off of a 1-hour chart. The overnight trade is a modified version of this off the day chart. I like to be 30 minutes into the chart so the indicator has a chance to form. On a 1-hour chart, a trade is going to usually be worth anywhere from 5 to 35 pips. And my sweet spot is 11 pips. But I will figure out, I'm going to try to get as many pips as I can, but 11 pips is doable, and I can get that done in 1 to 3 hours and then be on to my next trade. If I can do that 2 or 3 times a day, I'm making a very good living. So the goal here is basically get all the lines to line up. So with that, let's take a look. Chart I am trading off of is the Light 6 Major. It is a composite chart. It's showing me 6 different currency pairs. And again, all on the 1-hour chart. This first chart is all US based pairs. Even though we're not going to trade the dollar this morning, we'll still look through it to just see if we can see a situation where we can find a good setup. So I start with the middle section of the chart, which is called the majors and minors. The red and green line is the major indicator. The black and gray line is the minor indicator. This horizontal blue line is the overbought line. When the market is overbought, that is usually a good time to sell. This horizontal red line is the oversold line. When the lines are down here, the market's oversold, and that is usually a good time to buy. Now, my goal is to catch the lines when they are either above the blue line or below the red line. And when they're above the blue line, I want all of these lines to be pointing down, entering the channel. When they're below the red line, I want them all to be pointing up and entering the channel. Now, to me, that gives me the highest probability of getting the trade I want. You can see, however, we can be overbought, and there's still, we can get 10 pips. It's not part of my trade strategy, but you can do that. So here we're overbought, and in the course of 1, 2, 3, 4, 5 hours, you were able to get 25 pips. Now that's depending on how many pips you were going for, so you easily got 10 pips out of this. You could have also gotten stopped out. So given that I don't know how much is left here, I just avoid it. So here we're overbought going up, so I'm not going to bother with it. Here, Euro USD, again, we have been overbought for 7 hours, and that was worth 47 pips. So this, most likely, you would have gotten stopped out had you taken a buy somewhere along here. Even here, when it starts to come down. Now here, we still don't have a good signal. The slope on the green line here isn't that great. But if you were to take that here, you would have been stopped out. That's well over 30 pips, 38 pips. So that's why that's why I don't like to take a buy when we're overbought. So nothing here. Pound USD, again, nothing here. I wanted to catch it down here when it was coming up and get my pips. US dollar, Canadian dollar, we're in the middle of the channel. and we've got disagreement between the majors and minors. Majors are going up, minors are going down. Dollar, U.S., Swiss franc oversold, and minors are sideways, majors are coming down. So here, here is a situation where it started to go up, but again, we didn't have the signal on the pressure yet, so we wouldn't have taken this trade. Plus, I don't like it when there's a big gap between the where the green line is and the horizontal red line. And then here, USD, yen. Miners are kind of going up, but they're losing steam, starting to go sideways. Majors are coming down, and it looks like we're hitting a bit of a resistance line here. So nothing there. So I've cloned this chart and created another chart with non-USD pairs. Euro pound. Well, wow, this would have been nice to have caught a little bit earlier. We just touched the overbought. The majors just touched the overbought, turned, came down. They are now, the green line is touching the oversold. So we've missed this. I'll consider a trade all the way up until kind of the halfway line. Australian dollar, yen, overbought, going up. We're not going to trade it because the yen is got a bank holiday. And since we're trading off of a 1 hour chart, again, both of these, it's evening time in Australia and Japan. Good to learn the time differences. Right now in Sydney, it's approaching 9 p.m. And in Japan, it's approaching 8 p.m. So it's not active trading in either of these markets. If we're trading off of a 1 hour chart, we want at least one of the markets to be active. So we don't have that here. Euro Canadian dollar. We've got disagreement between the majors and the minors. Majors still going up, minors coming down. Now here's a case where it turned, and it turned rather sharply in the middle of the channel. And this was worth quite a few pips. Now, when I see how do we get this back here? Where it turned, if I saw a turn like this on the euro dollar, I might consider taking it. Where you've got a really steep turn. So this is kind of an exception to the rule. Right now, I'm just going over the basics of the rule, but like I wouldn't take it on the euro Canadian dollar because I just don't trade it, and I'm not familiar enough with how it reacts. But a sharp turn like this, that's a trade I'll consider on the euro US dollar. I won't consider it on the pound yen. Pound yen is a little too volatile for me. But on the euro US dollar, if I see something like this, that's a trade I would take. Australian New Zealand dollar, overbought. Everybody's coming down, double cross. So we've got 3 points here. We're overbought. That's 1 point. All the lines are coming down. That's 2 points. And the third point is the red line is crossed over the green, and the black line is crossed over the gray. So 3 points here. There's good steepness on the line. That's a plus. The lines are clustered. That's a plus. The only thing I don't like is that I prefer the green line to be a little bit closer to the horizontal line. But with 3 points here, the next thing would be to go up and see if the TNT supports it. What I'm seeing here, which is a sell signal. 2 orange lines are going up. So that's contradicting. Those are telling me buy. And the only line confirming this is the dotted blue, which is going up. The blue lines are inversely related. So when blue's going up, that means sell. So I only have one of the 3 telling me sell. I want 3 of the 4 telling me sell. So I don't have the support here. So plus the other thing, again, evening time in both of these markets. So we're not going to trade it. Pound yen. We've got the disagreement between the majors and minors. Majors going up, minors coming down, or overbought. So we're going to pass. Euro, Australian dollar. It's around 1 o'clock in Europe, 1 to 2 o'clock, depending on where you are in Europe. We were overbought. Everybody's coming down. I do have the double cross, but the thing I don't like here, we're not halfway, so it's something I would consider. But the thing I don't like is the slope on the green line. We're going from more steep to less steep. The steep is still, the slopeness is still greater than 45 degrees on the green line. The slope is more than that, but that we've kinked, that bothers me. I like to stay away from the kinks. 2 orange lines going down. Dotted blue going up, so 3 of the 4 are telling me sell. Here I have very weak up pressure. I want down pressure. What makes it weak is the steepness of the lines. So these are, not very steep. So you can see, like here, these are steep lines. And then the closeness of the lines. So there's kind of a gap. The lines are converging, but we've got that gap here. And actually the green line is starting to go flat. It's losing slope here. But I want either the lines going down or the red line on top. And I don't have either of those here. So let's go to the next group. Canadian dollar, yen, oversold, minors going up, but the majors have turned, so we don't have agreement here. Again, we're going to stay away because it's the bank holiday. Euro, New Zealand, overbought, everybody's coming down, and I got the double cross, so the 3 points. So this good signal. Pluses are here. I've got the slope going from less steep to more steep, so that's a plus. The lines are clustered, that's a plus. And I'm just about ready to enter the channel, that's a plus. So I like this setup. When I pump up to the TNTs, 2 orange lines coming down, dotted blue coming up. So 3 of the 4 are telling me sell. I need at least 3 of the 4 telling me sell. And I've got up pressure, and the red line is touching the green line. It quite hasn't crossed, but it is touching. So I'm going to consider this plus on the green line, the slope is decreasing. So, and the lines have converged. So Europe, Euro, New Zealand dollar, we're looking at a sell. So the next step on the analysis is to confirm the setup. And I confirm the setup by looking at the 2 and the 4 hour chart. So here I'm going to open up, this chart has different time periods on a pair. So here we're going to do Euro, New Zealand dollar. And let's save this. And what I'm looking for on the 2 and the 4 hour, I want to see that we are overbought. I want the lines to be up here. And the lines are overbought on the 2 hours. They're not going down yet. They're kind of sideways. The gray line's coming down and the green line's coming down, but the red line's up and the black line's up. I don't care on the direction of the lines. I just want them to be overbought. The reason I want them to be overbought is because if this weakens, but both of these are overbought, it'll eventually come down. It'll just take a little longer for the trade to execute. So here we're overbought. Line majors are coming down. Minors are sideways. So I've got both overbought. So I like that. That confirms to me that we've got a down move coming. Then my next step is to figure out what that down move is worth. And I do that by going to a clean chart. And let's Euro, New Zealand dollar. And here's a clean chart. And I want to know where the support and resistance are. The support and resistance are where this candle seemed to naturally stop. I'm going to crunch up the chart a little bit so I can get more data points. And then I'm going to just drop a little line where I see the support and resistance start to stop. So stopping in here, a little bit over here, a little bit. Let's add another line. So it's stopping in here, stopping in here. Let's add another line. Oops. Oops, we can't see it here. On a 1 hour chart on the Euro USD, these lines tend to be about 40 pips apart. So we're at 81.04, 81.40. So that's about 35 pips. And 81.40 to 81.77, that's about 37 pips. So I'm going to open this back up so we can see it a little bit better. We don't have many data points. What I want to do is I am going to trade within these the support and resistance within this channel, because you see, if I tried to trade through this earlier, see how it's like bouncing on this line. I have to wait longer for it to bounce and break through this line, and I don't want to do that. I want to get in and get out. So once I see this, now the trend, the other thing I want to know is the trend. So am I trading with the trend? So here we kind of got an uptrend. Here's a big uptrend, and here it's not quite as fast. When I'm trading, if I'm trading with the trend, I'll take a few more pips. If I'm trading against the trend, I'll take less pips, because I don't want to get caught with a trade and it's going the wrong direction and moving away from where I want. So we're looking at a sell. I want to know how many pips I have to each of these lines. So here, come on. That's 15 pips down and 18 pips up. So we got 15 pips going down. Let me just try to make this a little bigger so we can see it a little better. And one more time. This mouse is hard to grab these things. It's about 10 pips. 10 pips. All right, let's go back and take a look at the signal. So we've got 15 pips till we hit that line, but we're trading against the trend. So I'm going to take a few less pips. And we're in a new candle, and the candle has softened up. The signal has softened up. The green line has gone from more steep to less steep. It's still going down, but it's less steep. Sideways. Green line has definitely crossed over. I'm just thinking about it. I think we can get 10 pips out of this. So we're going to go ahead and take a sell for 10 pips. So if you're in the simulator, take a 10 pip, and we will use a 30 pip stop loss. So this was the Euro New Zealand. I don't have that open, so I'm going to go to File, New Chart, and it's going to be in this third group, probably Euro New Zealand right here. I am going to make it a 1 hour chart. This is a demo account. And, let's see. We got a 2 pip spread, 49.0 to 59, 2.5 pips. Wow, that's a lot. That is a lot. 2.5 pips for a 10 pip trade. 1, 2. That's 25%. So what that means is we've got to make 2.5 pips before we get back to break even to cover that spread between the buy price and the sell price. Normally it's like it might be 2 points versus 2 pips. Because of that, I'm going to pass. The spread's too big on this. If the move was more, like maybe 15 pips, because if I was going to take this, I would take 10 pips. I would take it till probably we got to this point, to the base of this candle. The 15 pips is going to be like somewhere in here. So I don't like it enough to take. And that's the key, or one of the keys to successful trading, is to not force it. If the setup isn't there entirely, I'm going to pass. I'll wait for a better opportunity. So to gain that discipline is something you want. Okay, gang, sorry, no trade this morning. We will reconvene Monday afternoon, and I'm guessing there will be a good trade setup tonight because there's been a lot of movement so far today. All right. Thanks so much. If you want to change your life, trading is a way to do it. It's done it for me. I've been trading about 4 years. These indicators are terrific. We can teach you to use them. If you have any questions, you can go ahead and schedule a call with me by going to forexsmarttrade.com and going to schedule, and you'll be able to get a dedicated 30 minutes with me. Thanks so much. We will see you again on Monday. Bye-bye.